Pre-qualification and affordability are two different things, and I think it's important as a potential home buyer to understand the difference between these two. All right, when you're getting ready to buy a home, you're going to be asked by your real estate agent, are you pre-qualified? How much are you pre-qualified for? And then you're going to talk to your loan officer, and one of the main things we're going to do for you is help get you pre-qualified. Now, as a loan officer, we know that we can qualify somebody up to a debt-to-income ratio of about 45% in most cases, and there's some cases where we can go as high as 50% for a debt-to-income ratio. Now, just because someone qualifies at that higher ratio, it doesn't mean that this new mortgage payment is necessarily affordable. So that's where affordability comes in. The discussion you really want to have with your significant other, with your family, friends, and advisors, etc., and with your loan officer is, hey, what really fits into my monthly budget? What kind of a monthly mortgage payment can I afford? Do you want it to be the same as what you're paying in rent right now, or can you take that a little bit higher? So you want to make sure that this new mortgage payment fits into your budget, and that's really where the affordability part comes into play here. Now, as a loan officer, I think that it's a good rule of thumb to try to keep your debt to income ratio at 35% or lower in order for this home to be more affordable for you. Now, it doesn't mean you can't work it out even when you're at a 45% or 50% debt to income ratio. I remember when my wife and I bought one of our homes, we were really stretching ourselves. We had a debt to income ratio of nearly 45%, and it made me quite nervous. I knew that we were going to have to tighten our belts and cut back on some things in order to make this work. So even if you have a debt to income ratio that's high, doesn't mean you can't make it work out. But you got to keep in mind that it might make things a little bit tougher for you. Remember, your mortgage payment is going to be probably the largest payment you're going to have each month. And on top of that, you're going to have utility costs that perhaps were higher than you've ever had, and you're going to have ongoing maintenance costs on a home. So you have to take all that into consideration when you're buying a home. I hope this information helps you.